Hey everybody, this is Jim at SP500chart.com. It's about 10 minutes after 4 o'clock, July 16th, 2013, and we're going to take a look at the S&P chart as we always do after each day's close. It's not always an easy read, and the goal here is not to make these incredibly bold predictions because we're really not in a position in the chart to where we can do that. That's happened in the past, but we're not there right now. We're kind of in this seeking out the sense of direction mode, I think, and have been for a while. And I'll explain a little bit more about that. But before we get into it, I want to remind you that www.sp500chart.com and this video are for educational purposes only. Nothing stated at the site or the video is intended to be used as investment advice. I can draw lines on charts, and hey, a lot of people can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. I've mentioned this a number of times in the past, and that is technical analysis isn't always just trying to make a prediction. Sometimes it is the technical analysis are tools that help us make a diagnosis. Okay? So a doctor, you'll have blood drawn. They'll look at your cholesterol and they'll say, well, your LDL is 180. They can't make a prediction that it's 180. That's not why they do the test. But they read the number, they say, hey, it's 180. That needs to come down. Because there's a line at which we begin to worry, and there's a line at which we feel, hey, that's not a problem. So that's kind of what some of these lines in the chart mean. Yesterday, we pointed out that we are looking at 3 channels. Well, before today, we were looking at 3 channels simultaneously. We were looking at this larger teal channel, which we are still in, by the way. Then we were looking at this medium-sized red channel that broke down today. And we were looking at this short-term blue channel that broke down at roughly the same time as the breaking of this channel. So what does this mean? Well, it means when this little blue channel broke, expect short-term weakness. When this red channel broke, I would say expect a little bit more of a dose of weakness. And if this channel breaks, which it has not yet, then expect a significant dose of weakness. So, we've been looking at this intraday high of about 1687 in the S&P, and you can see that goes back to the latter part of May, making mention of the fact that I would really expect there to be some resistance there. And it looks like we may be encountering just that. But I don't think this is I don't see any signs of any kind of major top thing going on here. So, at least not yet. And that's not to say that we might not be forming a top. It just isn't formed well enough to be able to look at the chart and say, yep, there's your top. Because if anything, to be honest with you, this chart still looks rather bullish. I think we could come down and sell, encounter a little bit of selling, but I think would be a healthy thing. But I don't think the market's going to come way down, and I think we're going to eventually end up in the 1700s, and probably not terribly far down the road. That's the feeling I get from the chart as I look at it right now. And one of the reasons is I see some support lines that seem to be lining up right not that far under where we are with today's close. And I see these at about 1668 or so. And if that were to break, then I see it in the mid 1660s because of our rising support line in this larger channel. So if we continue to come down, let's see if we get picked up in the high 1660s. If we continue to sell off tomorrow. Now, what makes this kind of interesting too is the fact that if we take a look at a 3-minute chart, you know what I'm going to say. See if you can be a mind reader. Okay, first off, let's take a look at what happened today. We came down, and it looked like we wanted to initially bounce on roughly at this blue line, definitely, and close enough to this red line. It looked like we wanted to try to get picked up here on support from both of these, but both of these are also rising channels, and no channel lasts forever. So we broke the red one again, came back, got a little rally, but then came back down and took out this little blue channel on the 5-minute chart. And you can see that when that took place, it really resulted in a fairly quick loss of roughly, how many points? Not that many, roughly just a fairly quick loss of about 7 points. That's not a major thing. But then we have a rally, another dip down, a rally, another dip. And you see what I'm looking at, I'm sure, and it certainly bears worth pointing out that we are, and we keep seeing these things all over the place, don't we? Where we are either making a bear flag or we're making an inverted head and shoulders. And I cannot tell you which it is, but I can tell you that we've got at least enough points on the chart, enough data points to where we can draw these lines and go in tomorrow's trading with the idea that if our lower line breaks, then I would expect a move down to test the 1668 and change level at least. And if that bounces there, then great. Then we will likely come back up to re-challenge this 1687 level, because I really thought we should get a test of that level, and we failed to do that. We came up to 1684 yesterday, then turned over. It just seems like 1687 should be saying, come on, come up here, give this a go, let's see what happens. So what's interesting to note is if this does end up being a little inverted head and shoulders pattern, and we do get above this neckline at some point tomorrow, and it would probably be fairly early on, then a back test of this little broken blue 5-minute channel could very easily allow for the S&P to reach 1687 without us having to make an excuse at some point for a technical trend line that did not do the expected thing. So let's just kind of keep our eyes on this. This kind of has a little bit of a bullish shape to it, but that would not be confirmed until the S&P took out this top resistance line. If it does that, then I would expect a back test on this blue line. If, on the other hand, tomorrow we come back down and put pressure in the mid to low 1670s and we break support of this little pattern that started forming today, then I would be looking for at least a test down in the high 1660s. The good news is that we are still in the larger channel, which I'll remind you actually has even a little bit more room for selling, to where even if the 1668 were to break, this market, the S&P, could be picked up in the mid 1600s and still turn around and come back up to re-challenge that 1687 intraday high, which is the all-time intraday high in the S&P 500 for all time. So guys, I don't think we can ignore the fact that we're seeing some of these smaller channels break. But remember that the purpose of these smaller channels is typically to take us from the bottom in the larger channel to a spot where we begin to meet some resistance. Now, with the breaking of that intra-channel support line, I'm going to move this upper line just a little bit, since we now can, I think, reasonably say that this touch on the 11th, even though the S&P continued to go higher, this touch on the 11th is technically significant. So we're moving this line just a little bit. So if we were to revisit this a week or two down the road, I think this line now is perhaps a little bit more accurate. Because you'll remember, prior to this, I'd mentioned that just like a gun sight, maybe now isn't the best time to be talking about a gun sight, but I'm going to do it again. We had two touches that were only about 4 days, 3 days from each other. So as we extend that on out, quote, down the range, you can see that any small inaccuracy with either one of these points gets magnified as we extend that line forward. So I believe we can now refine this upper line just a bit, and doing that by saying that where we encountered that top line early on the 11th is technically important. So there you go. Let's watch that little pattern right here. This should give us an idea whether tomorrow is going to be a mildly up day or a down day, depending upon which one of these lines we get ends up getting taken out. I guarantee you one of them will go soon, and that should give us the clue as to which way the S&P wants to go in the very short term. Hey, I want to thank you again for watching, for your attention, and especially for your support and for your understanding that technical analysis isn't always this perfect crystal ball. Sometimes it just kind of tells us when to start to get concerned and when not to worry. So right now, the LDL came back. It's 155. Not great, not life-threatening. So I think we're okay as we stand today. Let's see what happens with the rest of this week. Thank you again. And everybody, please take care. See you tomorrow.